Now we live.
What's up, family?
What up? What up? Another Sunday. How y'all feeling? Let me get myself.
Good. How are y'all?
Man, listen, feeling better than last week. I appreciate all the love, by the way. Couldn't get back to everybody DMs, but I appreciate all the love. Those y'all checking in.
Man, them folks don't love you. They just knows AJ. They just knows. They just trying to keep tabs on you. They trying to see, dang, is it another strain coming out? How this going to affect the market? Is you good? Did you have to go to the hospital? Like, they just trying to gauge the sentiment. That's all.
And listen, I don't respond half the time on a healthy day. I can't.
I'm messing with you. But yeah, what's up though, y'all? We back. Another Sunday. You feel me? We got Tim here. My man Tim.
We got Bartholomew Cartwright and his oldest daughter, Alexandria Cartwright, in the building.
Here he go. Already
he a mess, y'all.
He is a mess.
Look, we got two money makers in the building. You feel me? I'm down on my luck and I needed some help with finding out how to make some money, man, because I'm trying to make ends meet. My bills, they starting to send me the colored papers where they done sent it to you a couple of times. And I still haven't got it to him yet. So I got to figure out how to make some money, man. So I heard Lex and Tim was like the go-tos if you need to get some bread. You need a setup. You need something that, you just need to make some money on. These two right here, I heard they like the dynamic duo for that issue. You feel me? I'm just telling you what I've heard. You see, she got wealth on her shirt. Tim,
here we go.
As soon as he start talking, he sound like money. I don't know what type of 2030 mic he got, but it sound like money. You feel me? Ain't no distortion. It's very clear. You feel me? So
Spider game.
Listen, man, make sure y'all get Nah, he don't play no games. He got the chair, he got the background set up. Listen, get y'all pencils, get y'all paper. Turn on your voice memos if you had to, do a little quick IG story or something, but make sure y'all paying attention, man, because we led up into this. We done had two future intro videos to lead into some more setup, strategy, mindset type of environment. So hopefully y'all ready for this so we could, document this, have this for y'all to come back to if you need to. And, just really learn how to operate in this futures market. With that being said, I don't want to waste too much more time. I know, these is two talkers right here. You feel me? Like, if you follow them on IG, they be having their lives for like 1, 2, 3 hours. You know what I'm saying? Like, they gonna sit with the people. So I'm not gonna waste no more time. Y'all go ahead and have the floor, man.
All right.
Let me share my screen.
You share Lex. I don't be, what I'm saying? I done got old. I don't know how to work Google.
Y'all can see that?
Yeah.
I can see it.
Okay, cool. All right, Tim. You can go ahead with the disclaimer. I don't know what
you're gonna do it like that. Yeah. I was saying if you're gonna make it the full screen, you're gonna leave it like that.
It's not the
you gonna put out disclaimer. You want me to say it? I know it verbatim. You want me to say the disclaimer? I'm gonna say the disclaimer. This goes for me. This goes for Alexandria. This goes for Tiva Nachi. This go for Brittany Reiner. This go for all the Come Up series. This go for anything you see on this channel. We are not financial advisors. We are not fiduciaries. Nothing that we say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. You feel me? Now we got that out of the way. We gonna keep moving on. All right. Okay. We're gonna get serious now. What is a strategy, right? A lot of folk, when they think like, oh, I need a strategy. They be thinking about a particular trade setup. A trade setup is not a strategy. A trade setup is a part of your overall strategy. Your strategy consists of a lot of stuff, and it's just a little bit of simple stuff. Tim like to keep it simple, stupid. KISS, that's what they told me in the military. Keep it simple, stupid. A trading strategy is a systematic approach to buying and selling positions. I don't care if you buying shares, I don't care if you buying options, I don't care if you buying futures. It's a systematic approach to doing it. You feel me? So you want to follow a system, you want to follow it step by step, right? And it's all based on predefined rules and criteria. Now, you can be a technical trader or you could be a fundamental trader, but you're going to have a trade and strategy that you following. It's not just one setup. I see the DMs all the time. Can you explain order blocks? No, Timmy Rogers, I can't explain order blocks. You know what I'm saying? It's like everybody want to know the shiny new object syndrome. You see what I'm saying? But get your system together, get your strategy together, and follow your strategy. And me and Lex gonna try to help you get on the path of understanding what a strategy is. If you thought you was gonna get on here tonight and learn the one setup that's just gonna make you all the money, you're wrong. The door right over there. It right over there. If that's what you're looking for, the come up series ain't about that. It's no cousin left behind. So we just laying the foundation so you can pull something out your back utility belt. You feel me? Next slide. Oh, y'all thought it was gonna be nice today? No, it ain't. Okay. Once you got your whole strategy in place, right? You don't want to make a move until you see your trigger, right? Your trigger is the most important part of your strategy, right? Well, Tim, what's a trigger? I'm glad you asked that, little Timmy Rogers. The trigger is a precise event that tells you now is the time to trade. You know what I'm saying? So if you're a technical trader, it might be like, oh, it did a retest on this trend line. It broke this trend line, came back and retested it. If you like say, okay, I'm gonna get in if we break this high or if we break this low. Once it break that high, that's your trigger. You know what I'm saying? That's the trigger is the part of your strategy that says right now is the time to go. A trigger is like if it crosses an EMA, you know what I'm saying? If you see a little fuzzy red bear out in the forest and he telling you to cross a red line, cross the line and go, then you crossing that EMA. You feel me? If it's approaching the gap, if it's touching the gap, you know what I'm saying? Then that's your trigger. Whatever your trigger is, that's when you press go. So the trigger is the most important part of the strategy, right? So Tim, what's the rest of the strategy? I'm glad you asked that, little Timmy Rogers. When we go to the next slide, we're going to talk about what's the rest of the strategy, right? So what's the rest of the strategy? It depends on if you a levels trader, if you're a moving average trader, if you're a candlestick pattern trader, if you're a trend line trader, if you're a price action trader, all of that is based off of technicals, right? The technicals is like your part of your trigger, right? That's part of your strategy. You're looking at these technicals to say, okay, this is a potential setup. You see what I'm saying? And if you are a fundamental trader, like a hedger, if you're using futures to hedge against a position, or if you like what you call them, the people that actually produce products and you're using futures to cash in on the better prices that you think is going to hedge again, to combat against the future price. You think the price gonna go up, so you're using the futures to buy your products. Then you're gonna be looking at the fundamentals. And what's the fundamentals? You got quantitative fundamentals and you got qualitative fundamentals. You know what I'm saying? The quantitative fundamentals are like the assets, the liabilities of the companies, the cash flow of the companies, the EPS of the shares and stuff. You're going to be looking at all that kind of stuff to make your decisions, right? The qualitative stuff is like the leadership, any kind of patents that they hold, the customer satisfactory stuff. This is all the stuff that's going to be more important to you because you're trading these futures over the long term. You may be buying like contracts on the December contract and it's just now March. You see what I'm saying? Because you're thinking, oh, some headwinds coming up. you know what I'm saying? Like the price gonna go up, so I'm gonna lock in these prices now because I want to get it in December. So you're doing the futures on the long term, whereas on the technical side, you're looking at like the more of the day trade and stuff. Like what price level is it coming to? What moving average has it crossed? Is it a depth cross? Is it a golden cross? What can't do I see a head and shoulders? Is it like Trent? I basically trade price action, and I know Lex basically trade price action, and then I'm gonna stop running my mouth right now for a minute, just for a minute, and I'm gonna let Lex step in and talk about some stuff that you need to be aware of before you even start trading. Lex.
So, and y'all, I don't know if I'm gonna be on Tim's level, but I'm gonna try to keep my energy up there for y'all. But before you start trading futures, either sim or live, you gotta have some rules. Because if you think you're just gonna open up a futures account and you're gonna eat the market up for, I made 10 bands today, no, you're not gonna do that. You can lose 10 bands today though, very quickly, right? So you need rules for what you're doing, and the way that you trade sim, you should trade live. So don't be in your sim account with $1 million and making 500,000 in a trade, knowing good and well when you open your live account, you're gonna be trading one micro contract. And that $100 ain't gonna hit the same as the 500,000 that you was sim trading with, right? So these are some questions you can ask to, set up some rules for yourself so that you don't, spiral out of control and blow up an account, because you're gonna have days when you spiral. We all spiral. It's a matter of knowing what are your triggers and knowing like what keeps you from doing that. If I break a rule, like for me, if I break a rule, I know I'm probably gonna spiral. Every time I break a rule, I break more rules to justify the rule that I broke. So some questions you can ask, like write these down. Like, what days are you going to trade? You're not going to trade 5 days a week and think you're going to be like super profitable. Yeah, there may be setups 5 days a week, but you might be busy. Or like, for instance, I go to work on Tuesdays. I go into the office. So I can't trade on Tuesdays. I'm not going to try to be doing both. I'm gonna lose a trade like that. So you want to have your days. Like, do you trade Monday, Wednesday, Friday? Do you trade Monday, Tuesday, Thursday? Whatever you figured out that your setup works best, that's the days that you choose to trade, and what works for your schedule, right? And then what hours within those days. You do not want to sit and stare at the chart for 8 hours. Like, I've done it. And every time I do it, it doesn't end up well because I end up forcing something just because I'm watching. So like, I personally only trade between 9:30 and 12. And shout out to P-Dub, who was on here last week. He told me, trade like your future self would want to trade. So like, when I walk away, when I'm free, completely free from everything, I don't want to sit at the chart all day. I already sit in front of a computer all day. So I'm trading how I want to be free. Like, I'm gonna have my little 2.5 hour, 3 hour work day, and I'm going on about my business. I don't trade the second session. I trade the US Open and call it a day. If it's there, it's there. If it's not, it's not. And then, so you want to know, how much of your account are you going to risk per trade? So if you have $1,000 account, $10,000 account, do you want to risk 1%, 5%? Like, you have to know that ahead of time, because that's going to help you come up with your stop loss. So, and I like to equate that in points. So if I want to risk 1%, and I have an example of this later, if I were to risk 1% of my account and my account is $10,000, then I'm risking $100 per trade, right? If I'm not willing to risk more than that, then I can't take a trade that's going to have a bigger stop than $100, right? So you would equate that in points on the chart and have your risk to reward correct. How many trades per day are you allowed to take? So let's say you have a $100 stop loss, or that's the 1% of your account, right? If you take a trade and you lose $50, are you going to allow yourself to take another trade and potentially hit your daily max loss, which is $100, or are you just going to take your $50 loss and go on? Or if you're trading the ES, your $500 loss or your $1,000 loss and go on, right? So if you take a lot of trades, you're giving yourself more time to be wrong. The less trades you take, the better trades you take, the more profitable you're going to be over time. What's your max daily loss based on your account size? So like we just said, if I know I can't lose more than this today, because there's going to be opportunity tomorrow, but only if you don't blow up your account today. So you want to know your max daily loss, because that's going to keep you from spiraling, right? What's your minimum risk to reward ratio? I'm not taking a trade unless I can get 2 to 1, right? So I'm risking 1 to make 2. So if I'm risking 5 points, I'm risking 5 to make 10. Or my personal like ATM is what I'll call it. I like to risk 10 points to make 20. 20 points is a good day. And heck, I'll take 10 if I have to, if the market doesn't give me what I want. But 20 points is a great day, right? And then at what point do you move your stop up in your trade to protect yourself? So if I'm in that trade trying to get 20 points, but the market is showing me it's not going to get to my target, do I move my stop up or do I let it play out? You have to, it takes time. You have to learn that. You have to watch the charts. You have to practice in order to know. You have to learn to read the price action so that you know, hey, I should close this trade because I can tell it's about to go the other way. I took a trade last week and it went up. I probably got up like 6 or 7 points. And then it went back and reversed on me. And I saw the bias change and I saw that it was going bullish and I was going short. So that's not going to work. And I had a 10-point stop, but I was like, let me just close this at 6 because I already know it's going to go hit my 10. There was no point in me taking a 10-point loss when I knew what the market was going to do. I was just wrong. And I had to admit that and accept that. And that's hard. Like people think like, oh yeah, I'm not going to do that until you get in that trade. You get to moving your stop. You get to doing all types of things you said you weren't going to do because you're afraid to be wrong. It's like ego and pride and it's your money. So it can be difficult, right? And then what are your parameters to enter and exit a trade? So that we'll talk about that a little bit more later, but here's like a starting point to making some rules for you, right? So how do I trade? I like to trade on TradingView. And you can paper trade on TradingView or you can integrate a broker and trade live as well. You can paper trade on the mobile app and on the desktop version, but you can only paper trade. You can't live trade on the mobile app, right? Not yet anyways. And I use Tradeovate. So you can see here, it's linked here at the bottom. You can link your brokerage. So I use Tradeovate when I want to trade live, and then I'll just paper trade through TradingView. If you're new to futures, you have to paper trade. I don't care what anyone says. Don't even think about opening a live account. You need to paper trade. And the cheapest way that you can paper trade and start practicing like today, there are a couple things you have to have with TradingView. So you need Pro or higher. So I think there's Pro Plus, and Premium. I got Pro. I don't need all that other stuff, right? So, and it's if you buy it monthly, it's $14.95 a month. And if you like buy a year out, it's $12.95. It's paid annually. And then you have to subscribe to market data, which is if you're trading, it depends what you're trading, but I only trade the ES. So I needed the CME E-mini group data, right? And that's $4 a month. So when I first started trading on TradingView, I spent $18.95 just to see if I would like it. Because there's no point in going and buying a whole platform for a year and you don't even know if you're gonna like it. Because I didn't like TradingView at first and now I love it, right? So I spent the $18 and then within that first month, they offered me to upgrade to Pro for the whole year for $89. So I was like, yeah, I'll just pay that instead of paying the $150 up front, you know, now that I know that I like it and they're giving me a discount. So that's what I did. It worked for me, right? And that's all you need to paper trade. You don't need nothing else. You pay your little $4 a month and you can go paper trade and you can practice. You have to practice, I promise you, or you will blow your account. Like you will lose all your money. And that's not me being funny. That's not me like, I'm just not going to sugarcoat it because it's so easy. You're going to blow your first SIM account and be like, oh man, reset. When you blow your live account, there's no reset. Like that's real money, right? And then, so I like I said, I live trade on here too. And I use Tradeovate. When you have Tradeovate, you don't actually have to buy the data, the $4 from TradingView because you have data from Tradeovate that you pay for. So you don't need both. And then Tradeovate's margin requirements right now for the ES, the day and night requirements are $1,000 of margin per contract. And now it's usually $550, but it's because the market is so volatile, they went up. And day/night just means like you can trade the day session, but you can't hold through the halt. Or you can trade the nighttime session, but you can't hold, you know, through the halt the next day. And then the initial margin is $13,200 per contract, and that means you can hold through the halt. And you know the market halts every day from 5 p.m. Eastern to 6 p.m. Eastern. And I never have held through the halt. I don't want to hold through the halt because the market be gapping up, gapping down. You might get your CNBC notifications like right at 6:05 or something, and be like stock futures down 100 points. And now imagine if you was in a trade and they opened up down 100 points, you done got liquidated. You can't do that. Oh no. Like I said, I'm only trading from 9:30 to 12. I'm not even in a trade that long. I'm not even in a trade at 4 o'clock. You know, at the end of the day, it's not worth it risk wise. And then let's say, you know, that's too much money. You can trade the MES and that's highlighted and that's $100 margin and then $13.20 to hold through the halt. And the MES is the exact same thing as the ES. They trade the exact same, might be a tick or two off sometimes, but it's 1/10 of it. So if you make $100 on the ES, on the MES, that's $1,000 on the ES. So it's basically the same thing. And then I put the NQ on here. I don't trade the NQ, and I'm not telling you to go trade the NQ because the NQ is wild. She will take your money faster than the ES will. And then the margin for that is $2,000 per contract, and then $18,000 to swing NQ contract, which is the NASDAQ, and I would never do that either. And then the micro is $200 and $18.70. But this is what the platform that I like to use. There's a lot of different platforms you can trade on, and then Tim's going to tell you what he likes to do next.
Okay. I like to use Ninja Trader. I know a lot of people heard about Ninja Trader. It's like real popular for trading futures. These are my pros and cons when it comes to Ninja Trader. The things I like about Ninja Trader is you can do everything for the free 99. Technically it's for 14 days, but if you know, like I know, it's like you have like a stash of like about 8 or 9 different emails, and then you just run it back. You know what I'm saying? You run it back, but you can get free data for 14 days. When I was learning how to trade futures, I went through like 7 emails, and I back tested and paper traded to my heart content to the free 99, right? You get a lifetime subscription, lifetime license to them for $10.99. If you're in some fancy community that gets you a discount, you may be able to get a discount, but you just pay one time for the platform. It's $10.99, and you get free upgrades for life. You ain't never got to pay again for the platform, right? Their data, you paid like $12 a month for the data, right? They're a discount intraday broker, meaning the intraday margin, and I get into it when I get down to the bottom part there, their intraday margin is lower than for, say, a trade station. Like I got Trade Station, their margin is 25% of the initial margin, you know what I'm saying, which is more. TOS, I think TOS might be a little bit more than that, right? You can do playback and you can do sim. Well, Tim, what's the difference between playback and sim? I'm glad you asked that, little Timmy Rogers. Playback is when you go and you trade a day in the past as if you're trading in that day. And sim is when you're, as a lot of people like to say, forward testing or paper trading, when you're trading it in the live market as it's going on right now today. You're sim trading it or paper trading it. That's the difference between sim and playback for anybody that didn't know, like little Timmy Rogers, right? I like their charts and I like their tools. It's just comfortable for me. Like it or love it. These the cons about a Ninja Trader. It's like antiquated. They don't have if anybody who don't know antiquated is like old like me. You feel me? They ain't got no mobile app, so I can't do it on the go. Like I can't, I can trade on the go on Ally, I could trade on the go on Trade Station, I could trade on the go doing all this stuff, but I can't trade on the go on Ninja Trader. I got your PC. It worked best on PC. If you use a Mac, you got to use all these parallels and all that. It drove me crazy using it on my Mac. So I stopped using it on my Mac. I only use it on my PC, right? You got to stay connected to the internet. You know what I'm saying? Preferably being connected to a landline, because if you got, that finicky T-Mobile Wi-Fi, you're gonna have your tears in your eyes if you disconnect while you on a trade. The desktop app and the website, they like two total separate things. Like, and I guess because you can pick any broker that you really want, that really like talk to them. Like I use the Ninja Trader broker, but you can use like Interactive Brokers and all these. They have a list of brokers that they work with. So I guess since it's like that, you can't like log into the desktop app and add money to your account. You got to log into the website app, add money to your account, and then go trade on the desktop app. That's another thing. That's a minor thing, but I done got old and stuff like that get on my nerves, man. At the bottom down here, if you can see it on the slides, we got the like the intraday margin. I'm just gonna call out the ES because that's all I trade, the ES and the MES. I ain't gonna insult nobody intelligence. You can read the rest of it. But for like right now, all intraday margin, and I think it's for all platforms, not just NinjaTrader, but right now, since it's so volatile, all of the margins, intraday margins are double. So whatever you see right now until the foreseeable future, all of it is double. So right now, to trade an ES contract, the margin is $1,000 because it's 500, right? I'm just gonna say what's on the paper. You just double it in your mind. And to trade an MES contract is $50. But the thing of it is, if you like, I only I get into that later. The day trade, intraday margin, like Lex said, you can trade it during the day, but at the close, if you don't have what's in this next column that say initial margin in your account, your broker is going to margin call you. They're going to close your position. If you get margin called on NinjaTrade, I think they charge you like $50 for the first offense or something like that. You're going to get a margin close. They're going to close your position. If you up, down, or sideways, they don't care. They're going to close that position. If you do not have this initial margin of $12,540 for an ES or $1,254 for an MES contract in your account, right? The maintenance margin, that's what you like. If you swinging futures, like I said, like if you like a hedger, or if you like a producer and you buying futures way out and you're, you know what I'm saying, you're trying to lock in price, the maintenance margin is what you got to have in your account to hold a position once you get it open, right? Once you get it open, if you drop below that maintenance margin, like just say if you in this position for like 2 or 3 months and then it's going against you, if it drops below that maintenance margin, they're going to be like, hey, Tim, you need to put some more money in there. You up under 11,400. And then if you put the money in there, no harm, no foul. But if you don't put the money in there, guess what's going to happen? You guessed it, margin call, right? And then they show you like the position size and all that. Now, what this is over here to the far right where it says all in rates, if you buy because they got different licenses that you can buy. And if you buy the lifetime license, this how much you going to pay round trip, meaning when you get into the position, you're going to pay $2.04 per contract. And when you get out the position, you're going to pay $2.04 per contract. And with the MES, when you get into the position, it's 56 cents per contract to get in and 56 cents per contract to get out. That's the fees. That's the fees that you pay to get into the position. Now, don't confuse the fees with the margin. The margin is what you got to have to open the position, and the fees is what you pay for opening and closing the position. And yeah, I'm about to throw it back over to Lex because yeah, that was my last piece.
And yeah, he wasn't playing about NinjaTrader being outdated. The reason I used to use NinjaTrader and the reason that I left is because, you know, I like to chart a lot. You can open Ninja one day and all your drawings gone. And it used to just irk my soul. You ever like wake up on a Monday and all your charts gone? I had to go. Anyway, risk management. So the biggest key in trading is not about, you know, how much you win or how much you lose. It's really like your risk. Because if your risk is set up right, you could lose 5 times in a row and, you know, you get a win and that's gone. Or you get 2 wins and it eliminates those 5 losses, right? So your risk to reward has to be on point. So we haven't talked about tick values or point values yet. So the ES is worth $12.50 per tick or $50 per point. Now, the way Tim and I trade and P-Dub and everyone else that, you know, is in our little community, we trade for points, not for ticks. Like you'll hear people say, oh yeah, I hit 15 ticks on the ES today. Man, we don't, we want points. We want 15 points. You feel me? Points, not ticks. And basically that's $50 a point. And, you know, my average trade, I'm targeting 20 points at minimum. If you have multiple contracts, you can let them run a 30, 40, but it's all based on your entry and the setup, right? But the MES is a tenth of that. So it's $1.25 per tick and $5 per point. So it's literally the same thing. It's just divide the ES by 10, and that's what you got. And like I said earlier, at minimum, all of my trades are 2-to-1 reward to risk, right? So that means I'm risking 10 points to make 20. That means I'm risking, and I usually don't go over 10 points. Like I'm probably not going to have a 15-point stop, because if that gets hit, I was just major wrong. I'm very wrong. It means the market is not showing me what I wanted to show me if I have to risk that much. And a lot of times I like to get my risk smaller if possible. So Tim, he has preset ATMs, which we'll talk about next, but I don't use the ATM. I set up my trades directly through the way that the market is trading, right? So if I see my setup and I know I can put my stop like 6 points down, I'll put my stop 6 points down, because if it gets hit, I know I'm wrong, like immediately. I don't need it to go 10 points to tell me that I'm wrong. Or if I see, a great entry, I might put my stop 2 or 3 points down, because I know it's not going to get hit if I'm right. If I'm wrong, then I'm wrong, right? And that means that I could be risking, a 3-to-1 setup or a 4-to-1 setup. So if I hit, 12 points, which I usually go for more than that, but if I hit 12 points and I'm risking 3, that means, that's a 4-to-1 trade. That's a great trade, because I would need 4 losses to negate that 1 win with that setup, right? So an example of that, if you have a $1,000 account and you're trading one MES contract, which is a micro, you can risk 10 points, and then your target would be 20 points, right? And now this is based off the candles in the market. It's not just this is what it is. No, the market has to want to trade there, and you'll be able to see that, but you have to know that that's where it's going, right? So you would be risking $50 to make $100. So you're risking 5% of that $1,000 to make 10% of that $1,000. And now you can see, let's say you win 2 trades in a row, you're going to have to lose, 4 trades just to get back where you started. And if, you're trading your setup and you're not breaking rules, it's hard to blow up your account. Now, when you start breaking rules, it's easy to blow up your account. And most people, they hate on the micros. Don't hate on, start where you are, start small, trade. I don't care if you have a $50,000 account. When you go live, the emotions are different. Trade the micros, even if you have to trade 3 or 4 or 5 of them. It's different. Let's say you have a huge account, right? And you see it draw down $2,000, that's going to scare you for the first time. That's how those big accounts and big contract sizes move. But if you're trading the micros, getting your bearings, getting used to things, a $20 movement ain't going to scare you. It's your risk to reward, literally. You might think your risk is more than it is, and the market will quickly tell you if that's right or not. Tim's going to tell you about ATMs.
You on mute.
Oh, yeah. Little Timmy Wilders, you on mute, Little Timmy?
Okay, I had to mute it. I jalapized. I had to mute it, right? But like Lex was saying, setting up an ATM strategy, and for those that don't know, ATM stands for automatic trade management, meaning like once you get into the trade, the system going to be like, okay, Tim, I got it, and I'm going to get you out based on this criteria, right? But before we get into like actually setting it up, what I want to tell you how Tim Rogers do it is I calculate my maximum loss allowed in ticks before I even set my stop loss. You see what I'm saying? I want to know it's strategy again. It's about, like Lex said, what's your max loss? What's your max risk you willing to take, right? And the first thing you want to do when you sim trade and you in a demo account, the first thing they do on all platforms, I don't know why, they set you up with $100,000 account. You feel me? If you starting out with $100,000 in real life, hey, leave it at 100,000. But if you not starting out with 100,000, set your capital at a realistic level of what you gonna be able to put in your live account, right? And like Tim Rogers say, if you don't have the initial margin in your account, don't be trading that instrument. Like if you ain't got, let's just round it up for ease of math. If you ain't got 13 racks in your account, don't be trying to trade the ES. If you ain't got 1,300 in your account, don't be trying to trade the MES. You know what I'm saying? Why I say that? Because that's the initial margin for each one of those. So in this fictitious account right here, I'm setting the capital at 3,000. What's my max loss? The max loss I'm willing to lose on one trade is 2% of my capital, right? So you got 3,000 times 0.02, that's $60 per trade, right? My max loss is $60 per trade. So when I get that $60 per trade, and as you can see, I'm using the MES because like Lex said, the tick value of the MES. And for anybody that don't know what a tick is the smallest increment that the instrument can move. Just think about it like with the US currency, a dollar, right? You have the US dollar. A penny is the smallest increment of the US currency, right? So one penny is the smallest increment of the US currency. One tick is the smallest increment in futures currency. And each, like the ES, the MES, the NQ, they got four ticks per point. But when you go over to like the ZB, which is the 30-year treasury note, they got 32 ticks per point. So the tick value is going to vary from instrument to instrument, and the tick setup is going to vary from instrument to instrument. So get to know your instrument to know what you need to divide your max risk by. So using the MES, you're going to divide that $60 by $1.25. So that means your max stop loss is 48 ticks, right? 48 ticks is your max stop loss, because 48 divided by 12, well, 4 ticks in a point, and then 48 divided by 4, nope, I got to do my math. It's 40, it's 12 points. You feel me? You know what I'm saying? 48 ticks is 12 points, right? So 48 divided by 4, there you go, get it together, right? It's 12 points, right? So your max stop loss is 12 points. So now that you know that, right, now before you put in your stop loss or your profit target again, determine if your max stop loss gonna yield a favorable risk to reward. You know what I'm saying? Like Lex, I believe she said the minimum risk to reward she gonna take is a 2-to-1, right? For me, the minimum that I'm gonna take is a 3-to-1, meaning for every dollar I risk, I'm trying to get $3, right? So you got to look at your instrument and be like, hey, if my max loss is 12 points and I want a 3-to-1, is it likely that every setup that I trade with this ATM strategy, when I trade this ATM strategy, do I think I'm going to get 36 points? You know what I'm saying? So if you don't think, okay, every time I'm gonna get 36 points, just say, okay, I believe I can hit a 20 piece easy. I can hit a 24 piece. So if you can hit 24 points, you know what I'm saying? Then you can risk 8. You can risk 8. You can set it up for 8 and try to get 24. So okay, I ain't gonna put my max stop loss in there. I ain't gonna put 48 in there. I'm gonna put in 32 because I'm gonna risk 8 points on every trade. So you'll put 32 and your stop loss. That's your tick value. Put in 32 ticks, and then I'm shooting for 24 and 96. Right? 96, you'll put 96 in the profit target because it work out in ticks. So you put in 32 ticks in your stop loss because you're risking 8 points. Then you'll put 96 ticks in your profit target because you're shooting for 24 points. And then you'll just save that as a template and give it a name, whatever. And so every time you get ready to trade, you will just select that ATM strategy. And when you select that ATM strategy, when you hit fire, if you want to buy, if you want to sell, if you want to right click and put in a limit, whatever you want to do, once you get picked up, Ninja Trader will put you into that position with a 32 tick stop loss and a 96 tick profit target, and you can just sit back and don't do nothing else and just wait for it to either come stop you out or hit your profit target. And I like to trade with ATMs because my emotions get the best of me, and once I get into the trade, I got to walk away from the computer because I go to messing with it. I go to try to move him or stop and all that because the emotions take over people. So the computer just gonna do what you told it to do. The computer ain't got no emotions. That's why I like to trade with ATMs.
All right, so let's talk about charting. I like to chart what's called from the top down, right? So if you see over here, I got weekly, daily, 4 hour, 1 hour, 15-minute, 5 minutes. These are the time frames that I use. And the colors that I have them highlighted, those are the colors that I put on my chart. So I have on this chart to the left, I only have weekly, daily, and 4 hour on here because I didn't want it to get looking too crazy. But you'll see that I'll mark my weekly levels on the weekly chart, and then I'll zoom into the daily, and I'll mark my daily gaps and daily levels and stuff like that. And then I'll do 4 hour. And those are like your key, those are going to be your hot spots, right? So if you see something run into a daily gap and fill, like you're probably going to get a reversal. Like, and P-Dub explained gaps last week. If you don't know what that is, it's basically when there's 3 candles and the first candle and the third candle don't share a price. And then there's a gap in between. And those are what's called like liquidity points. It's where the market likes to trade because the market likes balance. And those are imbalances in price. So the market will trade back into them and close those gaps and then finish the original move that it was going to do. So this is how I chart. I start with the weekly, then I go to the daily, and I literally go down to each time frame. And what I like about TradingView is you can open up your object tree and you can create little folders. So I have a folder for my weekly levels and my daily, and I have a folder for each one. So that way, let's say I don't want to have all these levels on my chart all the time, I can hide them and I can bring them back. So I don't have to delete them and keep redrawing them, you know, because that just gets on my nerves. And then I will just keep, you know, adding new ones as they come and deleting them as they go away. And then I lock them. So like these levels that you see on here, these are gonna be my levels probably for the next couple weeks, right? And they're not going nowhere, they're locked. So I can't accidentally delete them or I can't, you know, do anything crazy. But this is where you start. This is where your high time frame, your bias and all of that. And a lot of people ask us to talk about like daily bias, which is hard to talk about because it's really reading the tape and it takes experience to understand like, I think the market's going to go up today. You really just have to guess until you can read it and understand, like, I'm seeing this, I'm pretty sure we're going to go up. And then you go up and you're like, you're right, I was right. But there's going to be days when you're wrong. I'm wrong a lot. But that's where your risk management comes into play. So this is where I chart, and I like to see where this price has to go. So like right now you can see, I took the screenshot earlier before the market opened, but we kind of traded up into the white line is weekly equilibrium, sorry. And basically what that means is the market is trading into a premium now. So we're no longer at those lows that we were at, but when we came up those last 4 days, we didn't retrace enough. So there's still some liquidity down there. So that yellow box, can y'all see my cursor probably? That yellow box down there is a daily gap. And then the purple one is a 4 hour gap. So at some point this week, I'm going to look for price to trade down into here. So that's kind of where you get your bias from. But, you know, price could just keep going up and not come back. It doesn't have to fill these gaps. But if it looks like it wants to make a move there, then I know where my targets could potentially be on higher time frames, right? So this is how I start. And then I kind of dig in deeper, right? So like I just said, liquidity. So liquidity is basically when the market trades to old highs or old lows and it runs below or above them. So you can see these lows from October. The market came all the way down here, ran this 42.50 stops, and then price went back up. So essentially it's running stops. It's taking old position stop losses so it can gather more money. It's basically taking people's money to go the direction that the people thought it was going to go. So the market can't just move on its own. You know, it has to move off of liquidity. So it's taking whoever went long here in October, their stop loss is going to be right below this. So the market traded all the way down here, took these stop losses, and then started going back up. That's all liquidity is. You can have liquidity on the daily time frame, the weekly, the hourly, 4 hour, it's everywhere. Now, obviously, the higher time frame, the more it holds weight, but you're not going to get, you know, weekly liquidity ran every week. It doesn't work like that. You know, we just ran weekly liquidity last week. If we go back, you can see this was a weekly low here. People went long, set equal highs, came back down, took those stops. So now this would be our new weekly low. So if we ran 4101, then we'd be taking no stops. But realistically, how long is the market going to trade down? So we probably will retrace, take some money in here and keep going up. Now, unless, you know, news can always change this, but that's just what I think, right? But on the lower time frames, you're going to see liquidity get taken a lot more. And that's where you find your intraday trades like we like to do. So there's two trading setups that I like to trade. I call them rising bread and melting butter. Rising bread is my long trade. So it's when I'm bullish, and I want to take the market up. And there's 4 things that I look for. So I look for liquidity to be taken. So every day when I wake up, I probably wake up around 7:30. I don't look at the market because I get antsy. I want to get in the trade right then. But I know I don't trade till 9:30, like I said earlier, right? Or after 9:30. I don't like being in that opening candle volatility either. But what I'll do is I'll mark my overnight high, the midnight open. So I go to the midnight candle and I go to the opening of it. So for those that don't know, this, we're looking at this candle here. This is the low. Where the bottom of the green body starts, that's the open, because it went up. On a bearish candle, it would be the opposite. This would be the high, and the open would be the top of the blue candle going down. So I get the midnight open and I get the overnight low, and I do all that before 8:30. So at 8:30, which is where you can see the gray turn into a light gray, I don't care about the highs and lows anymore. I'm looking at price now. So I'm looking for liquidity to be taken, and then I want to see a break in market structure, which I'll explain in a second. I want to see a fair value gap, which is just a gap that I just explained, or a breaker, which I'm not going to get too deep into breakers because it's a lot. Form during that break in market structure, and then I want to enter inside of the fair value gap or the breaker. So in this example, you can see that we ran down past the midnight open just before 8:30, and we set our overnight low. And then price ran up above the midnight open and then traded back through down the overnight low. So at this point, it's probably around 9:30 in here. I'm probably bearish depending on high time frame. So I would look at the 4-hour, I'd look at the hour, I'd look at the daily and be like, where's price likely to go? And if I'm bearish, there's no setup here for me because liquidity hasn't been taken. There hasn't been a break in market structure. So I'm letting price trade down and do what it wants to do. By now it's 10 o'clock. We get this big bullish candle. So we take out our overnight low, which is taking liquidity. We took out a low, right? So we took it down and then price shot up. So at this point, I'm like, okay, I'm no longer bearish because we just took out all these lows. We need to go get some more money before we can keep going down. So I'm waiting for the market to show me a break in structure. So this red line here is the most recent swing high before the market takes out these lows. So I would draw me a line here before this even happens because I want to see if price is going to trade aggressively through it. What does price do? It plays around. It's probably about 10:30 now. And you'll notice time and price is important. So 9:30, we get volatility. 10:30, we start getting more volatility because it's London, which is the London market. It's their power hours starting at 10:30. So you'll see increased volatility in the market. Price trades up through this swing high, which is called a break in market structure. Anytime I see that, I flip my bias. I was bearish, now I'm bullish because the market is showing me what it wants to do. And what do I want to see? I want to see a fair value gap or a breaker. I'm not talking about breakers, I'm talking about gaps. And there's a small gap right here. And I actually took this trade live. So this isn't just hindsight, I took this trade. And I think Doc took it with me. But price traded up. So at this point, this is when your emotions and your patience comes into play, right? Because price is all the way up here and you're like, dang, I need to get my entry down there. Are you going to jump in right here thinking it's going to leave you? Because you're going to get stopped out. You have to be patient. Let price come back to you because it will. So it trades back into this fair value gap right here. I took it long. And then obviously y'all can see my stop loss and my risk to reward. So my stop would be below this gap. And this is a huge candle. So I might even zoom. This is a 5-minute chart, by the way. I might even zoom into the 2 or the 3 minute just to see if there's a smaller gap or to see where I can place my stop to where it would be safe if I'm still bullish, right? So my stop should be safe anywhere in here in this red area because price isn't going to come back below this. It already showed me it wants to go up. So I took it long and then probably 20 minutes later, we're at my target. And then so you can set your targets based on the left side of the chart. So here at 7 a.m. we had a high. So this is a target, this is liquidity, because remember I said liquidity is above old highs and below old lows. So this could be your target, but I like these are equal. The market likes to take out equal highs and equal lows. It's just engineering liquidity. It's an algorithm, that's what it does. So I take it long, boom, target filled. It's 11 o'clock, I'm done. And look, the market then goes and completes its bearish move because it just needs to take some more money. Now, the whole day was bearish, but I took a long setup. Sometimes that's how it happens, but it's about where you can get in, where's your risk to reward, where's your risk to reward going to be, and how can you trade it? I couldn't have traded this short because it did most of the move right before I'm done, and there was no setup here for me. I would have had to wait till it broke structure lower. And by then it's about noon. I'm done. I cannot trade after that because I'll be breaking a rule. So that's rising red. That's the long setup that I like to take. And then the short setup is the exact same thing. It's just short. Like you're just taking it down. So liquidity taken, a break in market structure, a gap or a breaker during the break in market structure, and you enter inside the gap. So boom, we got our midnight open, our overnight low, our overnight high. So the market opens, it's 8:30, the market opens up here at a high. So we're running stops, obviously, we're engineering liquidity to run. These are called buy stops. So we're taking people who sell the market down. So say you sold the market here, you have to buy it back for your stop loss. So these are called buy stops. Buy stops are at top, sell stops are at the bottom. So we're taking buy stops at the open. I'm not taking a trade at 9:30 though, so I'm waiting. I'm waiting to see what it wants to do. Does it really want to trade lower? Because this could be a buy model. You see how this candle here just goes up, down, up, down. That's what's called a buy model. But you need to see a break in market structure before you can flip your bias to go short. So here it happens. And here's the most recent swing low, the swing high. We trade through it aggressively. The key is these candles are aggressive. Like they have to form a gap. If there's no gap, there's no trade, right? So price trades aggressively through this, and there's a huge gap here. And I took this trade down here. I wanted to take this trade, but it didn't come back and get me. So I wasn't going to be like, emotional and just press sell because that's going to get me clapped, right? So I had to wait for the market to give me another setup. So at this point, it's almost 10 o'clock. Boom, price trades again, forms another gap. And now I actually didn't take this trade. I took it from here, but I'll show you why in a second. I didn't want to take this short, which you can. Clearly it would have worked. I hate Tim, y'all. My bad. But I didn't want to take it short at 4,300 because I knew this gap was still up here, and that's where I wanted to take it. So in the event price wanted to trade back up there, I would have got stopped out. So I didn't take this short, but there is a breaker here. This blue candle is what's called a breaker. I'm not explaining that because it's too much, but if you want to learn more, you can go to the Inner Circle Trader and on YouTube, and he has all the content. Just watch the mentorship. You'll figure it out, right? But I didn't take this short because I was scared about this gap. My stop would have got hit if it decided it wanted to go up there. So I waited, and now you could have took this down, and obviously your exit would have been right here below these lows. But the trade that I took was here. So price traded here, 42.79, traded back up into this blue candle. This is where I shorted it. And then I shorted it down here, 42.50. I probably took profit somewhere in here. I don't remember if it was a 20 or 30 point trade, but I remember taking this short. But the way that I'm articulating this, the way that I'm thinking about where's my stop going to go, where is my take profit going to be, that's how you have to think on the go, like fast. It's not always going to look like this. It's not always going to look like the first example I showed. But you have to think like, well, if my stop could get ran, I'm not taking this. I have to wait till it gives me a setup that I like. And I knew once we broke through here and broke through 42.90, that we weren't going to trade all the way back up to 43.08 without going bullish. And in the event that we did, we would have had a bullish break in market structure and I would take it long. But we didn't do that. So that's why I felt comfortable taking it short around 42.90 I probably sold at 42.70 down here. And then you can see that it's going to continue to run because where are the old lows? It's going to take out the lows. The overnight low all the way down here, 42.38, and it went and took it. So every day is not going to be like this, but it's similar. And these are the trades that I like to take. So Tim, you want to explain yours?
Okay. I call mine the liquidity run reversal, and I didn't make this up. I just made up the name. Like Lex said, the setups that we trade, we got it straight from watching the Inner Circle Trader. YouTube is for free. If you want to know all the intricate details, like she said, go watch, you know what I'm saying? Cause we get the DMs with like, what's an order block? What's a breaker? What's a liquidity run? Go watch the videos and learn it, because like we add in a little bit of seasoning to the stew. Don't just take what we saying on here tonight and go out there and get ran over like a frog in the street. You know, I already gave the disclaimer in the beginning, you know what I'm saying? But anyway, I just got to put that out there because, you know what I'm saying? We got a lot of cousins that like to just take one thing and run with it. And I don't want to see nobody get clapped up out there in these streets, man. It's already hard enough dealing with the vid. Okay, so the liquidity run reversal is like, it's pretty much a fair value gap trade, just like how Lex was talking about with the fair value gap. This is like my go-to trading setup, right? And remember, the setup is only one part of your strategy, right? So we got 5 steps in the liquidity run reversal. If all 5 steps are not present in this setup, I do not take it. You know what I'm saying? I do. If it's missing one of the 5, it's not the liquidity run reversal, and I don't take it, right? So the first step, and as you see, this is really like a preface to the steps, right? You see in the bottom left corner there, it says, I'm bearish for the day, looking for a sell trigger at this point. You know what I'm saying? At this price, that's the liquidity pool. Like the price where I'm looking to enter, I call that my liquidity pool. I don't care if I'm going long or if I'm going short. It's my liquidity pool where it's like making a run on that liquidity. How Lex showed in the other one where it picked up the liquidity here and delivered the liquidity down there. Once it make that run on liquidity, once it get in that liquidity pool, that's when I'm gonna start looking for my setup as near to that pool level, like when you splash in the water, as closest to that as I can get, right? So step 1 is dip into the liquidity pool. That big long arrow right there, I just put it from the bottom to the top of that leg of that move, right? It dipped into the pool. And like, hey, Tim, it's going up. How did it dip in the pool? I'm glad you asked that, little Timmy Rogers, because I'm going short on this. So if I'm going short, it needs to run up and run through some buy stops to bring them back down. So it's dipping into the pool to the upside, right? I ain't gonna get tricked on that big bullish move because I'm already bearish on the day, and I know that white line right there, that's the liquidity pool. It's just jumping in the pool, right? So once it jumps in the pool, I need for it to go ahead and start forming swing highs and swing lows, right? If you don't know what a swing high is a high with a lower high to the left and a lower high to the right. It make a little point like this right here, right? And then I need to form swing highs and swing lows. The swing lows is just the opposite. Got a higher low on the left, higher low on the right. It make a point to the bottom, right? I need to start forming them swing highs and swing lows, right? If I'm bearish, step 3, it need to break that swing low with aggression, like bust through it. You know what I'm saying? I want a big, long, either one big, huge candle or like 2 big, nice, beefy candles to break through that swing low. You know what I'm saying? That's letting me know, oh, the market moving. And like Lex said, time is important, because if you look on the chart around 10:30ish, you see them moves start getting big. Around 11:30ish, the moves getting big, because that's that London power hour. You know what I'm saying? The moves getting real big. So you know the big boys are moving the market in the direction they want it to go. Once it break that swing, like you can use the liquidity run reversal both ways. In this case, we bearish. Once it break that swing low with aggression, the very next candle need to form a fair value gap. I don't want it to break the low and then form a fair value gap 3 candles later. The very next candle got to form the fair value gap. And what's the fair value gap? Like Lex said, it's a 3 candle pattern where candle 1 and candle 3 don't share price. And if you look at the little green box there, let's put the arrow on the green box over there for me by step 4, right over there, right? You see the look, yeah, right over there, that little green box there, it's a fair value gap right there. Now, that's step 4. Do I go now, Tim? Do I go now? No, you don't, little Timmy Rogers, because step 5, what did I say in the beginning? The trigger is the most important part of your setup of your strategy. Once step 1 through 4 happens, now it's a high probability trade. Now you're waiting for price to trade back up into that fair value gap. Now, depending on your risk tolerance, right? You want to check the swing high from that fair value gap, put it up to the swing high right there where number 2 point in that Lex. You want to look at that swing high. For all intents and purposes, we're going to say that's 4,500, right? 4,500, if you got an 8-point stop loss, right? You want to subtract 8 from 4,500. Right? And that's the lowest you can get into that trade to take this setup right here, the way it's formed on this date. Now, if you see how it's formed, then let's just say 40, what is that? 4405 or something, way down there. If that's beyond your risk tolerance, do not take that trade, because with this, the way this setup formed on this particular time, your stop loss needs to be up there where it says number 2, right? Swing high form. That your stop need to be above that right there. So if that's outside of your risk tolerance, this is the liquidity run reversal. But if your stop loss is got to be within that, don't take that trade, because it's more than what your risk tolerance allows. Once it trades back, you can take it at the bottom of the gap, the center of the gap, or the top of the gap, however you want to take it. And then you just ride it down well, I don't have anything on here. It'll be a specified point, a specified low that you're trying to run, just like on Lex setup. It's all the same. It's all based off price action. But if every single step is not there, don't take the trade. And if every single step is there, but it's outside of your risk tolerance, don't take the trade. And with that, ladies and gentlemen, I think that's the end of our presentation.
Yeah, that's all we got. Although I do want to say one thing. Him and I did not invent any of these concepts. We don't sell none of these concepts. These are all free concepts from the Inner Circle Trader on YouTube. And you can go learn them. This is just our interpretation of the education that he's provided. None of this is financial advice, because you can follow this. You have to learn to read the tape yourself. You know, Tim and I will take a lot of the same trades and have no idea. And we're looking at it totally differently, but we're in the exact same trades. So you have to learn to read the tape. It takes practice. It takes time. And you can do it, I promise. But you got to go learn all the material. Don't just take what we say for, and run with it. But it's definitely possible, and you don't have to pay $1 million to learn
No,
it.
that's the fact. All you need to, like she said, all you need to do is get the education, take notes, and most importantly, practice, y'all. Like, as they said, it's so quick to lose money in this game. Playing with futures is no joke. And y'all know we're all about protecting generational wealth. So we cannot stress to practice a paper trade enough when it comes to testing some of these strategies. But y'all did y'all's thing, and we appreciate y'all, though.
Nah, they definitely did their thing. We definitely appreciate y'all giving some game. It's a lot in that 60 minutes that y'all could make note of, go back and watch. I definitely appreciate Tim telling y'all, man, when you paper trading, change that account amount. Don't be up there playing with 100,000. You daydreaming. You not practicing. You up there daydreaming. You not really testing your risk reward, because you're not finna have no 100,000 in no futures account, man. Go ahead and knock that down to 1,300. You feel me? Knock that down to about 3,000. You know what I'm saying?
1,000.
Enough to where, yeah, when you start, you know exactly what you're gonna risk to say, worst come to worst, you blow this account. You won't be mad at losing that. I mean, you're gonna be mad regardless, but you're not gonna take too much of a financial hit of your overall wealth if you lost that entire amount. So, I think that was one thing that stood out to me is, as you're learning this stuff, you got to make sure that as you're practicing and learning it, you taking it very serious, because futures ain't no joke. I ain't never touched futures. I ain't never paper traded futures, just because of what I've heard from it. That's something, maybe down the line I'm going to get into. But the way my risk tolerance is set up, I don't even want that type of leverage on none of my money right now. I ain't got no money to play with. You feel me? Maybe when my kids graduate or something, I might start trading futures. You feel me? But
I'm paper trading all 2022. So
listen,
I ain't got no dollars to play with either.
My paper trade for about 10 years.
Tim, how long did you paper trade?
Listen, for real.
Before you went live.
How long did I paper trade?
Yeah, before you went live.
I paper traded for ever seemed like let me see. I got Jason's course. I got Jada Trader course in October 2020, and then I didn't go live until when did we go to the Grand Canyon? Like February or March. Whenever we went to the Grand Canyon 2021, it was like, so from October to like February or March, I was like, and I was going hard. I was back testing I was doing like in a week's time, I was back testing like 3 months in a week. It's like I was going crazy. Like I was doing like 3 months in a week. And then once I forgot what happened during that time, I would go back and trade it again to see if I got better. You know what I'm saying? If I got better for that time frame. Because when you paper trading, when you back testing, you want to back test in all different kinds of environments to see, you know what I'm saying, if you are a good futures trader. You know what I'm saying? And if I know how long we've been going, TiVo, AJ, how long we've been on here?
About an hour and 7 minutes.
Hour 7 minutes. Okay, I'm gonna give y'all a quick gem because I know we the come up cousins and everybody, you know what I'm saying, most of us trade options. So if you want details on this, you know what I'm saying, Spider Gang know what it is. It's videos on YouTube that I done did. But if you, like TiVo said, I ain't never touched futures, right? Here's the gag. The ES, the SPY, and the SPX are all the exact same thing. So if you understand the setup on the ES, then you can take an options trade on the SPY. I do it every day. I do it every trading day that I trade. I watch the ES. And when I see my liquidity run reversal, once I get the trigger on there, while I'm watching it set up, I'm watching the premium on the strike price that I want. And I say, okay, I want to get in. If it's the same day expiration, I try to get my entries between no more than 80 cents, and I want to get it at under 70 cents as far as I can get it, and no more than 80 cents per contract. You see what I'm saying? And so when it get back to my entry, going long or going short, soon as it touch my trigger on the ES, I fire on the options and get my my contracts. For my small account, my setup is 4 contracts going long or short. You know what I'm saying? And those 4 contracts, the max loss that I'm gonna lose is 2% of my overall portfolio. But the reason why I use 4 contracts and no more than 80 cents is because I can risk up to 20% on that trade to try to get 100%. You see what I'm saying? So, and I just posted an IG story the other day where I did a lotto at the end of the day. I bought 1 contract for 38 cents and I sold it for $1.15. And I did it based off of what I was watching on the futures. So if you don't understand why it, like, you wake up in the morning and the SPY gapped up or gapped down, if you look at the ES, you will see why it gapped up and gapped down. Because during the Asian and the London, price kept moving. And when the S&P opened up, the price was in a different spot on the ES than when it closed. That's where you get that gap from. So if you look at the ES, you will understand the entire price action of the SPY and the SPX, and that'll give you some dope options entries on the day trading side. You know what I'm saying? So, and because I don't even look at the SPY chart, I look at the ES and I look at the options chain for the SPY, and that's how I take my options entries every day. And I'm like Lex. I work from 9:30 to 11. I get off at 11 every day.
All right, well, there it is. They gave y'all a bonus. You feel me? So I don't want to, hear nothing that you ain't learned, nothing. You need something new. Listen, man, they gave y'all the game, and it come down to discipline and following them rules.
Yep.
So AJ, what you got for the upcoming week?
Oh, week ahead, yes. So earnings on Monday, we got Nike earnings. On Tuesday, we have Adobe and Carnival. And on Thursday, we have Neo. So basically what I'm looking at is specifically Nike and Neo this week, and looking at some of the supply demand trends coming out of China, and looking at the forward guidance. So that's what we could be on the radar for earnings. Conferences this week. NVIDIA has a big conference. GTC is this week, all right? So you'll be hearing all the buzzwords around, quantum computing, digital twins, networking, all that good stuff. I even heard they have like new GPUs and maybe some like new gaming products and stuff like that coming out. Adidas also has a innovation day coming up this week. Moderna also has a vaccine day, and there's also a couple other energy conferences if you see the energy sector popping off a little bit more than usual. Not that, oil doesn't have it popping already. Economics for the week. Monday, Fed Chair Powell speaks, also on Wednesday. All right, so he's speaking 2 days this week. Make sure you pay attention. You have crude oil inventories on Wednesday, as well as unemployment claims on Thursday. And Friday, you have your consumer sentiment. So those are some things to be paying attention to this week. So make sure y'all are doing y'all's DD, studying, and keeping your head on the swivel, especially if you're day trading. But that's it for this week, bro.
All right, Tim, Lex, y'all got anything for the week coming up for the people?
Gonna be volatile, like it's been, for real. Don't go and try to live trade anything you see tonight. Practice, go watch the videos, learn it all, learn everything you can. But you'll get there in due time. Be prepared to commit, 10 months to a year to practicing. And then, but if you can commit 10 months of your life to practicing and trade profitable over the next 20 years and not have a job, I think it's worth it. So just take time and do what you got to do.
That's right.
Yo, I ain't got nothing else, man. Lex said it all. But the only thing I will say is stay tapped in with all these young people make me proud, man. Lex, she my fifth child now. You know what I'm saying? AJ, she trying to ease in there. I might let AJ in there if she be nice to me, you know what I'm saying? I'll let her be my daughter too. But shout out TiVo, shout out AJ. I shot them out, you know what I'm saying, on every supplement, every Tim's tidbit. Y'all stay tapped in with people. Do the stuff that they well, I ain't gonna say do the stuff. You know what I'm saying? Listen to what they got to say. And if it makes sense for your trading style, you know what I'm saying? Back test it. And if it's hitting, then you might want to implement it. You know what I'm saying? I'm just a dude from Fort Lauderdale, Florida. The stuff I said today, it's stuff that I do every day. You feel me? Back test it. If it makes sense with you, with your trading style, you might want to implement it. It's not about trying to catch a bag. It's not about trying to get rich quick. It's about building something to leave for your kids. You feel me? If you know what I'm saying, if you got kids, it's your responsibility to make sure they got it better than you had it. Just like your parents try to make sure you got it better than they had it. So it's like, learn this stuff, teach it to your kids. You know what I'm saying? Internalize it. Don't look for one setup. Me and Lex gave you, you know what I'm saying, what a strategy is. We gave you 2 different setups, 3 different setups. It's really 2, because both of them could be her setup and my setup. She just named the bullish and the bearish 2 different things, but it's the same setup, you know what I'm saying, going long, going short. We gave you 2 different setups, you know what I'm saying? Don't try to go out there and master both of them. You know what I'm saying? Pick one thing, trade one thing for at least a year before you start trying to trade something else. Risk management is the key. And you know what I'm saying, if y'all wanna, just hear my story, tap in with your boy, man. Google me. I'm out here.
All right,
and one more thing, one more thing, people. Like Tim said, master one thing, one strategy, one setup that works for you, because the market don't always trade the same. So what was working in March and February and January might not be hitting in April, and you might have a month where it's dry. You can't find nothing. And that's when a lot of people will switch and go try to do something new. Like, oh, well, their setup working. And then as soon as you jump, that's when your setup will start back working. So you're going to have weeks and you're going to have months. June is the worst month to trade. August is a terrible month to trade. You're going to have months that are slow, and you have to learn to deal with that. It's not that your setup doesn't work. It's that you don't have patience. Now I'm done.
And that's facts, Les, because right now I'm a swing trader. I'm not even a day trader, but in my swing trading account, I'm in all cash right now. I don't have no positions on right now because it's not a swing trade market right now. Even with I let my leaps cash out and profit back in January. You know what I'm saying? It's like I'm in all cash, and I just been day trading little hits here and there, little base hits, just to stay sharp and just to keep making a little bit of money until it's time to start swinging again. So know when to hold them, know when to fold them, know when to walk away, know when to run. The old heads know what that is.
Have patience, discipline, y'all.
Hey, listen, I told y'all they like to talk, man. If I don't cut them off, we gonna be on here till about 10, 11 o'clock. You feel me? But listen, we definitely appreciate y'all, man, for real, for real. You know, like I said, if y'all go on paper trade, you know, come back, watch this, look at the setups, look at some of their rules, develop your own rules, have them right there with you every day, even if you trading options, because a lot of this stuff apply for options too. You gotta have rules, you gotta have discipline. You know, that's the name of the game. You feel me? And always knowing your risk. Outside of that, y'all, you know, stay blessed. You know, spend some time with your family. It's not all about stocks and options and futures. You feel me? And just be prepared for the week, man. Outside of that, y'all have a good one.
Peace and love, y'all.